And bank earnings still rolling in as the industry sees its first earnings report following the collapse of some regional banks, with bigger banks seeing capital moving in from regional banks. Here's Yahoo Finance's Rachelle Akuffo with the latest. Rachelle.
Hey, Inez. Well, it looks like resilience despite the turmoil. Four of the biggest U.S. banks who shored up First Republic Bank with that $30 billion infusion amid the banking crisis reported earnings today. Setting the bar high, JPMorgan, the biggest bank with a strong top and bottom line beat. Interest income up 49%. Now, the bank boosted its net interest income forecast for the full year thanks to rising interest rates, which did lift the stock. But looking at what we saw with loans and deposits, total loans flat, but deposits up 1.6% this quarter by $37 billion from December to $2.38 trillion. Now, that is, though, still down 7% from a year ago. We saw depositors really looking for some of these safer havens in bigger banks here, seeing those outflows, but also seeing them chase high yields in money market funds as well. But, of course, the deposit picture this quarter has a lot of nuance, especially given how quickly the picture changed when SVB collapsed in early March and as the bank laid out.
The deposits just came in. So by definition, these are somewhat flighty deposits because they just came into us. So it's prudent and appropriate for us to assume that they won't be particularly stable. Number three, there's a natural amount of internal migration of deposits to money funds. So you have to overlay that, and that's embedded in our assumptions. And number four, it's a competitive market. And, it's entirely possible that people temporarily come to us and then over time decide to go elsewhere.
There's no pricing power that the bigger banks have. Because if you look at the pricing, and we look at pricing sheets all the time, every bank is in a slightly different position, and every bank is competing in 3 months, 6 months, 9 months, savings rates. And then you have the online banks, you got treasury bills, you got money market funds. So there's no pricing power for the bank, but obviously we all have different franchises, and we're all in a slightly different position.
So JPMorgan, they're setting the tone to really keep aware of when you're considering some of these banking earnings coming out. Also taking a look at Wells Fargo, also seeing a top and bottom line beat and benefiting from that net interest income theme as well. That was up 45% to $13.3 billion. But they did leave full year guidance for both net interest income and non-interest expenses unchanged. Their deposits, though, fell 2% to $1.36 trillion. Also taking a look at Citigroup, their total loans down slightly for the group, deposits unchanged at $1.3 trillion, as you can see there, though, with a beat on revenue and adjusted earnings per share. And also taking a look at PNC, and as mentioned there, a little bit of relief here representing for the regional banks, although keep in mind PNC, one of the larger regional banks, their deposits up slightly, 0.3% to $436.2 billion. Their interest income down 3% to $3.6 billion. Obviously worth noting that being that PNC is one of the large regional banks, not necessarily representing some of the tinier ones, which did see a lot of inflows going into these bigger institutions. And of course, keeping in mind a lot of these bigger banks shoring up for what they could see in terms of ongoing repercussions from the banking crisis. And that's on top of being in January, these big banks already setting billions of dollars aside as they were already bracing for a recession and continue to shore up those banks as well. Inez?
Rachelle Akuffo, thanks so much.